Thursday, August 28th, 2025, Maneco 64, home of alternative economics and contrarian views. There's an old saying that goes like, be careful what you wish for. And with that in mind, we're going to look at the topic of the Mar-a-Lago Accord, gold revaluation. There's a lot of speculation, and I've been speculating on it, and it's grown especially with the appointment of Stephen Mirren, who's the guy who came up with the idea of the Mar-a-Lago Accords and devaluing the dollar. He's been appointed to the board of the Federal Reserve. Some people argue that he might be instrumental in devaluing the dollar and revaluing gold. All kinds of numbers have been thrown around from the current levels, around 3,500 to 10,000 to 15,000 to 20 to 40. But yes, it will be good news for those of us who have protected or who are still trying to protect our savings, our fiat savings, by getting out of it and accumulating gold and silver as much as we can. Yes, it will keep us going relatively well compared to, unfortunately, what the public is going to suffer. And it's no panacea, because revaluing gold is basically devaluing the dollar. Don't forget, the American currency, or any currency, is just the flip side. It's just a promise to pay in gold and silver. Yes, we don't have a gold and silver backed system anymore. But if you go back in history, if you go back 50, 100, 130 years, all the values that we still have in the foreign exchange market are derived from the weight of gold and silver coins. So we're effectively in that system still. So by devaluing the currency, you're actually devaluing the purchasing power. You're hurting those who don't have real assets. And what I'm going to do today is compare two countries that went completely different ways in terms of inflating and devaluing their currency. And it's a good exercise because we can see where these countries are today. And yeah, you will realize that it's not all that it's being it's not that great. It's not going to be a good thing. And I'm going to give you what I think is the solution to the economic woes, not just in America, but Western Europe, and the debt woes as well. Before we start, though, just wanted to let you know that over the last couple of months, we've built up a Rudy collection merchandise store for the channel. Rudy, of course, is the dog that usually sits there on the sofa. He's right now under the desk. I've got a few of the merchandise from the store, and I can tell you that it's good quality. One of them, of course, is this stainless steel water bottle. Very good quality. This is where I keep my electrolyte drink. I have this supplement every day. In the winter, I guess you can put coffee in there. But there's loads of other things like t-shirts, golf shirts now, mugs, and the Fed mugs, hats, and caps. So the link is below in the description. So back to gold revaluation. Why it's no panacea. And we're going to go straight to comparing two countries, and they're countries that I would say most of you are familiar with. I was speaking to the Nome of Zurich yesterday, and we were talking about Italy and the lira, the Italian lira, which of course doesn't really circulate anymore. But the fact that the Italian lira had the same exchange, well, one Italian lira before World War I was 1 Swiss franc, and I was kind of surprised. I've got an example here actually of, I can prove to you that it was. I don't have to search it on AI or Google, because I have a 1964 1 franc coin, which was still a silver coin. I think the Swiss had it till 1967 or 68. And here I have a one lira silver coin. It's a bit, it's from 1863, I think. And it's also a silver coin. And if you put them together, same size and same weight. So yes, the Gnome of Zurich was right, 1-to-1. And then though, and in 1863, the Swiss franc was the same size, by the way. So earlier this summer, we went to Switzerland, and I went to a coin shop in Switzerland, and I actually bought a 5 lira silver coin. And it's from 1927, so you can see here, 5 lira. And there's the King of Italy. So what I'm trying to tell you here is that 1 lira became 5. So that's a silver revaluation, a lira devaluation, right? And the Italians kept doing this, well, they've kept doing it ever since, this devaluation. And I've got a chart here of the Swiss franc versus the Italian lira going back to 1955. So from 1-to-1 before World War I, in 1955, it was 146. So the 1 Swiss franc, you could get 146 of these little coins. Of course, they're not silver by now. They're just base metal. Yes, Italy has been devaluing its currency ever since. And it's against the lira, because you can actually still calculate it in lira, because there's a rate at which the Italian lira converges to the euro. So right now we're at 2070 lira. So what I'm trying to tell you here, yes, Italy has revalued silver or even gold. Why gold? Well, there's another example, and that's why I love the coins, numismatic coins or old bullion coins, because they tell you about the history and what governments have done. Because I've got here 20 francs, Swiss francs, gold, and I've got here 20 lira gold, and that was from back in the late 1800s, and again, same size and weight. So it just goes to show governments, especially the Italian government, they've been defaulting and ripping off the public for over 100 years. And here we are now, 1 Swiss franc is over 2,000 lira. So unfortunately, what's going on, not just with the American dollar, but the British pound and all, even the Swiss franc to some extent, this 20 franc gold coin now is probably worth more like, I would say 500 to 600 francs. So the Swiss have devalued as well. They've gone off some money. But what I'm trying to say is, yes, gold revaluation, be it to the market price, be it to 5,000, 10,000, 20,000, and so on, is not a good thing. It just means that holders of that currency and people who earn in that currency are going to be a lot worse off. So Is it any wonder that, and I'm proof of this because my great-granddad left Italy in the late 1800s to go to Brazil. Millions of Italians left to go to the US or to Canada, to Argentina. They're everywhere. Now you know why. And one of the major reasons is because of economic opportunity. And there should be economic opportunity in Italy because it's a beautiful country. It's a rich country in resources and history. But unfortunately, the establishment and the people who run Italy, they've basically raped the public. They've been doing it for over a century through currency debasement. The people who have a lot of assets in Italy, well, they've done okay, but I would argue that they could have done even better if that inflation hadn't happened. So has it solved Italy's debt problem? Well, not a bit. I see here that Italy still has a debt to GDP ratio of 135% or thereabouts. Has it solved its economic woes? No. Italy, the Italian economy is not dynamic. And if you look at Switzerland, it's a different story. Of course, it's not perfect, but there's not hundreds of thousands of Swiss people moving to work in Italy. It's the other way around and has been, I would say, since the end of World War II. So, yeah, be careful what you wish for in terms of gold revaluation. Yes, have some gold and silver if you can to protect yourself. So what is the solution to the economic woes that not just the US has now of inequality, of debt? Well, it's not rocket science. You don't need a PhD economics degree, but unfortunately it's the PhD economists that seem to propose all the solutions, and they're the people that governments and politicians listen to. But the only thing that will solve this problem is through not just the government but the public, ourselves, tightening our belts and not expecting governments to feed you, to house you, not expecting the government to do everything for you and to pay for everything, because in the end of the day, governments don't have any money. They have to tax you, or in the case of Italy, aside from taxation, I remember that in the 70s, 80s, and 90s, there was a joke that I think Italy was a champion at tax avoidance. Yeah, because the government taxed because they had to pay for this inflation. They had to pay for the debt. So yeah, that's what happens. And yeah, tighten our belts. Small government. We have to deregulate. We have to go back to sound money, of course. Even though that's in itself sometimes not a solution, because Italy had sound money. It had gold and silver, as you saw, but the government can, they can just change the values and devalue the currency, and it will make things a lot worse. So the other thing I looked at is the GDP per capita of countries, and I see that Switzerland is number 3, and the estimate is around 105,000 US dollars. And you have to scroll down a bit, unfortunately, for Italy. Number 27 is at $41,000. So there's another example of what happens when you revalue silver and gold, or you devalue the currency, because basically that's what you're doing when you revalue gold against the dollar, it means that the dollar is going to be buying almost no gold anymore, especially if it's at 40,000. And what about government bonds? Some people are saying, well, if they, and I've said that as well, if they revalue and they get like cash in the treasury, they can go and retire bonds. Yes, and the price might go up of the long dated treasuries, but in terms of gold, it won't. It's just going to be an illusion. And I've got a chart here of the T-bond future, or the long bond future, gold versus that. Priced in terms of how many T-bond futures you get with 1 ounce of gold. And you can see that since 1999, it's been pretty much a one-way street, except for the period from 2011 to 2015, where there was a correction. And right now, gold is almost breaking out again versus the T-bond future versus bonds. So unfortunately, I think a lot of investment advisors, Wall Street types, and people in general, investors, they don't realize how important gold is. And they think that yields going down and the dollar price of bonds going up, yes, that's not a bad thing, but you really need to measure it versus gold, and you'll see that you're losing out. And another thing about Italy is that it's got one of the biggest government bond markets in the world, and I traded the futures of that market in the 90s before the euro came about, and we traded in lira, and it was a very active market. And why is that? Well, because the government there has so much debt. It's like, I would say after Germany, it's the second biggest government bond market in Europe. So it's 20 to 8 a.m. London time. We've got spot gold at 33.94. And if you look at this weekly chart, we're actually breaking out of this triangle, the top line of the triangle. Of course, tomorrow is the last day of the week, and also the last day of the month in terms of trading. And the monthly chart looks pretty good too. So the high today has been 3,400, and that line on the weekly chart comes around 33.93 or thereabouts. But it looks like gold could be ready for takeoff, and silver as well. Yes, it's been about 4 months since we began this consolidation in gold, and a lot of people are impatient. I mean, I've been at this since 2002, so I'm a bit more immune. But I would say also the miners are still doing really well, so that's a good sign. What about silver this morning? Well, it's up 23 cents at 38.82. High's been 86 and the low 54. I see that the stock market's pretty steady, so the results for Nvidia haven't really shaken confidence or anything. The markets are virtually unchanged. The Dow futures actually is up 118 points. The currencies as well are quite steady. I noticed though that yesterday the 30-year yield crept up to around 4.95. Right now we're at 4.90. As I said though, don't be fooled by the nominal price of these bonds. Keep an eye on the gold price. That's going to be telling you what's happening to your currency. So with that, I'm going to wish you all a very good day. Take care. Bye.